So the emergence of countries like the United States and Australia and other countries around the world, modern countries, adopting a fiat currency becomes a significant issue. So can you explain what a fiat currency is then?
Yeah. Let's go back just a little bit though, because actually this period of time when we had gold standards and fixed exchange rates is brief in terms of human history and recent. Before that, we did not have fixed exchange rates. So let's just go back to the Robinson Crusoe and Friday. So as Bill was mentioning, the idea was the reason you would use this money commodity is because it had an intrinsic value. And if you think of gold, that's the best example. It has obvious intrinsic value. And so you'd be willing to use that as a medium of exchange. Okay, once we move to a bank liability or a modern government liability, there's no intrinsic value in this. There's no intrinsic value in a bank note or a check drawn on a bank. It just represents a liability. It's a representative money. There's no intrinsic value in a modern coin or a modern government note either. So why would people accept this? Well, the sort of the typical orthodox answer is you accept it because other people accept it. It's an infinite regress argument. It's obviously, from inception, that makes no sense. Okay, sure, once everyone else will accept it, then you'll accept it too. But why did anyone accept it in the first place? Okay, well, the answer, if you're talking about bank liabilities, is that you're willing to take a check because you can use that to retire your own liabilities to banks. So if you have a loan from your bank, you're able to use bank checks to pay down that loan. So really the answer to this is that the bank liabilities must be accepted by banks to pay down liabilities to banks. Okay? Now, you may not be thinking of that when your neighbor writes you a check. You think, oh boy, now I can pay down my loan that I owe the bank. You might not even have a loan to the bank. But in the aggregate, this is the way that it must work. Okay? Well, government liabilities are the same. You can use a government liability, whether it's a coin or paper currency, to pay down liabilities to the government. So this really is a fundamental principle that the issuer of IOUs must accept back his or her own IOUs. And so once you've got a liability to some institution or some person, you're willing to accept their IOUs in order to eliminate your IOUs to them. Now, what is different between a bank and the government? Banks cannot impose IOUs on you. They can't make you liable to them. Okay? You have to voluntarily do that. You go to the bank, I would like to have a loan because I want to buy a used car. Okay? It's a voluntary transaction. Now we could argue about how voluntary that is. Okay? If you had more income, of course, you wouldn't have to use a loan to buy the car. But no one can force you to the bank and undertake...
a house is a better example.
Okay, a house. But no one can really force you to do this, right? So there is some voluntariness to this. On the other hand, the liabilities most people have to the government are not voluntary in the same sense. Most of the liabilities in all modern societies are taxes. And those taxes are imposed on you. So that is a huge difference from bank liabilities. Your liabilities you have to the bank are voluntary. The liabilities you have to the government, for the most part, are not. Now, in the aggregate, we hope we're democratic societies. We decided, in some sense, to impose these on ourselves through our representatives in Parliament or Congress. But individually, we don't have the choice not to have these tax liabilities imposed on us. So why will we accept government pieces of paper or pieces of token metal? Because we have liabilities to the state, and the state accepts those in payment. And fundamentally, that is what drives modern currency that a lot of people like to call fiat currency. It's a very common term. I prefer to call it sovereign currency because that gets us back to this sovereign power to impose tax liabilities on the population. That's sovereignty. We don't let banks do that. We don't let private corporations do that. In the past, there have been times when they could. But in modern societies, only government has that ability.